Well, good morning, everyone. Um, it's almost 6 o'clock right now in the morning, and I just started the the live stream. Okay, so today we're going to be talking about markets and what is forex, the forex market, to be exact. And let's just see who's online. Well, looks like there's no one online yet at all, but we are live. Okay. So a lot of people when they tell me to teach them how to trade forex, they always don't even know what it means, what the forex market is, and what forex means. And some people need to understand that forex is actually two different things. You've got the forex exchange market over here, like the guide Investopedia shows, and then you've got the forex itself, or like the forex trading, which is this over here. So this is forex trading. Like us retail traders, we are forex traders. But then there's also the forex market, the complete forex market. So that complete forex market is comprised of many market participants. Some of them, if you look around, let's look here. They usually big banks, and you can see here one of the biggest banks that trades forex is the Citigroup Bank over here, and then you've got JP Morgan, and Deutsche Bank is one of them. UBS, I don't actually know what UBS is, but I know Deutsche Bank and JP Morgan, as well as Bank of America. These are the big banks that trade forex, and they're usually the ones that move the market a lot. But then what people don't usually know or don't think about is that there's another percentage, a large amount of the market that is traded by other people, and can be normal people as well as the government. The government is also one of the biggest traders of forex, and this can be the Reserve Bank, and they usually do this in order to control the currencies and how basically currencies, they want to like control the demand and the supply of currencies within the market. So these can be your ECB and your Fed Bank and everything like that, and as well as the South African Reserve Bank, if we're talking about South Africa. And yeah, so yeah, basically forex is just, it's just the exchange market as well, the forex trading for short term. So then the forex market, when you talk about forex, people need to understand that we trade forex every day, even on Sundays, even though that the market is not open, and that's a different thing. We trade it every day because when you go out to the shop, oh, another thing that I forgot to mention is that the other people that trade forex are businesses, normal businesses as well. So your like ShopRite, Pick and Pay, your FNB. FNB is a business as well. It's part of these banks, but these are the major banks that trade forex. But then you've got your major businesses like BMW and all those others like Amazon. All those people, when they trade online, or when they want to sell products overseas, they need to exchange their current currency to another currency of another country in which they want to trade in. So this is like the major market that you think about. And the forex market is made up of a lot of money, about 6 trillion. I would say you can Google it yourself. How much money is in the forex market? So you don't usually get a quick answer like that, but you can just look around and see. Every day, Business Insider. Let's see what they say. So as of 2016, we had about 5 trillion, or yeah, $5 trillion traded. Well, they say it in billions over here, but 5,000 billion is a trillion. So yeah, It looked like it went down since 2013. So I think there was a lot. There was oh, okay. Wow. Okay. I don't like these new websites. I want you to subscribe to them. But yeah, anyway, you get the idea that there's a lot of money in forex. So we got to take advantage of that. And us as retail traders want to trade on speculation in order to make our money. So I'm using a demo account right now to trade this, and I made a few trades yesterday while I was teaching someone. But yeah, so when we talk about forex, you've got two different things that you got to think about. When you talk about the market participant, you think that's a fundamental aspect of forex, and as well as people trading forex at home and businesses and everything. That's fundamental when you got to think about how forex is traded. But then there's another idea that you got to take in mind, is that there's also the technical aspect as well, which is the charts and the numbers and everything. So the fundamental aspect you got to think about that, say for instance the government needs to lower the supply of their forex or foreign currency reserves. They'll basically like sell or like hike rates in order to like reduce that supply. So I need to double check my information, but this live stream is just here for those people that wanna get this idea. But I'm gonna post a video, a proper video on all of this. But this is a unscripted one where I can just go through stuff and yeah, basically like that. So yeah, here we go. We've got the central banks. You can look at them. So basically, a central bank is the monetary authority that is controlling the currency flow within a country, as well as overseas, because other foreign, basically the central banks can talk to each other like normal banks would, and the central banks also talk to the commercial banks, which are like your FNB, your Goldman Sachs, and all those big banks. So and the central banks basically have policies in which they conduct these exchanges, and this is called monetary policy because it deals with money. So fiscal policy is by the government itself, and monetary policy is by the central bank. So basically they'll control the money supply and so on, and they wanna move the markets based off what they do here. And here's a short video. You can use these links here to just get more information about it. So yeah, so one of the biggest central banks has to be the Fed. And if you had to talk about the first central bank, it has to be the Bank of England. The Bank of England was the first central bank, but when it first was created, it wasn't called the Bank of England, but it was one of the first central banks out there, and it's one of the biggest, as followed by well, it's the Fed right now, but then it's followed by the the English bank, the Bank of England. So yeah, those are central banks, and then yeah, so they buy and sell currencies. They can do this in any way. They usually do this by issuing bonds, or yeah, basically, or printing more money and supplying it to the market like that. Yeah, so, and then you've got many currencies as well that are traded. Right now I've got a spot chart of Euro USD. So basically the euro versus the dollar, and yeah, you can see, so in this market over here, but you've got a lot of currencies out there. And actually what you've got today now, you've got digital currencies called cryptocurrencies like Bitcoin and Dogecoin. So yeah, those as well are a new thing that you can trade today. So yeah, so basically when you are a forex trader, basically you're trading on speculation that one currency is going to be stronger than the other. So if you believe that the euro over here, the euro, which is, just think of it this way, the euro is stronger when the market is going up in this currency, in this pair, and the dollar is stronger when the market is going down. So you can see here in the short term, very short term, this is very short term. Look, we're looking on the 1 hour chart here, but in the very short term, the dollar is a bit stronger than the euro, and the market is going down. You can see, and this is a technical analysis that I've made. Yeah, here there was news that happened here that influenced this move in Davos. There was a Davos meeting. I didn't watch the meeting, but I happened to get some information on it, and I didn't really make this trade, but you can see, look what happened here. Usually when there's a market moving news or event like the one that happened in Davos, we've got moves like this that happen, where the market moves almost 100 points or 100 pips as it's called, like this. Let me just move this. Okay. But you can see here, you can never expect these kind of moves to happen. You can, using analysis and everything, fundamental, anything like that, but the market is the spot forex market is very unpredictable. You can never actually 100% for sure be that it's gonna go down. So you gotta use a lot of tools like fundamental analysis and technical analysis to grasp what's gonna happen. Like for me, for instance, I consider myself a very large bull, a bull trader. I mean, not a bull trader, a bear trader. A bear trader is basically a trader that believes the market is always going to go down because of certain events and basically values or something like that, that the market is going to go down. So I'm aggressively bearish on the market, meaning that I'm against the market most of the time. So this is my long-term analysis of the trade, because we've got channels building up on this currency pair, the Euro USD. So last year, 2017, we had a large channel building up, and then we had a correction, a short-term correction over here, and now we have a continuation, and it looks like it's building, and it's gotten carried away over here. Yeah. So for instance, the market looks like it's gotten carried away with itself, and it's actually broken the channel that it had during the end of last year and the beginning of this year. It's broken it, and we should look for support on that channel. So we should look for support at the top of this channel, which was prior resistance. I'm not going to talk about resistance and support and all those things right now, but these are things that I'm going to cover later on, and this is just a live stream where I just like go and do anything and just talk about anything basically, and then I'll make a proper video later on and then talk about the things that I want to talk about exactly. So yeah, yeah, basically when I opened the chart, actually my first trade was this one over here, and I made it around about here, around exactly here if I remember correctly. I made it right here, and I was like, okay, this market is going down, because I made it assuming, let me go back here, yeah, it was over here. Actually, it was over here. So I use moving averages for my analysis over here, as you can see, my moving averages. So when I saw that the market had broken down underneath my moving averages, I sold, which is not a good thing to do. You know, I'm not a really good short-term trader. I'm more of a long-term trader. So yeah, I saw that, and I said, okay, I can sell this, because I believe if I sell this, I can get 100 points or 100 pips on this movement. So yeah, basically that. And then the following day, I said, okay, this market has gone against me like this, and I was like, okay, this is interesting. we still need to find support over here. So let's try get in again. And then yeah, it went a bit higher. I managed not to catch this move over here and here as well because I was away. But I sold over here, and we're consolidating a little bit here. You can see the market when it consolidates, it basically stays at the same price range for a specified period of time. So basically like this. But it looks as if we are finding resistance over here. So we're finding a resistance line over here. So that kind of confirms that, okay, this market is going to try look for support down here, but it's not, we're not guaranteed of that. I'm not guaranteed of that. This is speculation. I'm assuming that it's going to go down, and I'm assuming that it's going to go my way, but most of the time it's not the fact. It's not the fact of the matter. But it's, if you use good analysis and good technicals, fundamental and technical, your probability of getting it right is higher. So basically, as you can see, so here I haven't made any profit. I'm down 23 Rand. I'm using the South African Rand in this demo account. So yeah, let's get back to this. So yeah, we've got currency pairs. So over here, one of the biggest traded currency pairs has to be the Euro USD currency, because it's the most liquid. The dollar is one of the biggest currencies used around the world, specifically because the dollar is the #1 currency for buying oil. So a lot of countries try to reserve the dollar. So they always try to have a dollar reserve in order to buy oil in the future. So this usually influences the price of the US dollar. So basically, if you come to this video, they will explain everything more clearly than I can, I believe. But yeah, so here are the major currencies. You've got the pound, the dollar, the Japanese yen, the Swiss franc, the Australian dollar, and the Canadian dollar as well. And these are traded internationally by businesses and governments, because businesses need to trade with each other, and some of them usually have headquarters in, say, the USA, UK, England. Well, that's in the UK. Forgive me. France and yeah, a lot of Eurozone countries. So if you talk about the Eurozone, they use the euro. So they use the euro. Switzerland is one that has its own currency. France used to have its own currency, but they discontinued that and they opted off for the euro. So when say for instance a business manufactures cars, and they need to buy supplies from UK. They need to buy supplies from UK. They can't go with their euros to the UK and buy into. Currently they can, but because of something called Brexit, it's not going to be the fact anymore, because euros are not going to be accepted anymore in the euro. I mean, in Britain or say UK. So, but most of the time you have to exchange to the local currency in order to buy anything within that currency within that country. So the biggest example that happened last year had to be the downfall of a company called Steinhoff, if I pronounced that right. The company had a lot of financial issues, so they had to now start selling their assets. In order to do that, they had to exchange their money, because they had assets in South Africa, UK, here and there. So there was a lot of exchange happening. A lot of exchange of money happening, and we can, as traders, we can take advantage of that. We can take advantage of that move and say, okay, this movement in the market is going to cause this much of a movement in the market. So the Steinhoff loses this much money and they need to exchange to the euro, so they need to buy euro. That's going to cause a demand for euro. making it stronger, so that there's going to be a demand for euro. You get it? So basically, that's what you need to take from the exchange of forex. Basically, because companies are trading forex because they need the local currency in order to deal within that country. So yeah. Another thing, as well as you got you got a minor and exotics. So an exotic will be something like some currency from an emerging market like South Africa, say so South Africa or Mexico, or like Brazil or Russia, like the Russian ruble, the South African rand. Is it the real in? I'm not sure in Brazil, but yeah. And then as traders, we usually take risk when trading. So this is our leverage. We usually use a leverage in order to trade, because we can't actually trade directly in this market, because you actually need a lot of money to trade this. This is trillions of dollars being traded a day. So your broker usually gives you leverage. They give you basically like I don't know how to explain it properly, but I would say basically like a loan. You're using the broker's money in exchange for future profits, and basically the broker is helping you to trade by leveraging you. They're giving you that liquidity. They're giving you that liquidity in order to trade. So say for instance in your account you only have $100, and they give you a leverage of 100%. So basically you're able to trade 100 times more money than is actually in your account. So that's the beauty of leverage. Means that you are able to make such trades like this and actually make a profit using a small account like this. This is a small account. This could be close to $90, and I'm able to make a trade and make some money of it. Yeah. Otherwise, if I really wanted to trade in forex by myself with no leverage, one-to-one, I would need thousands of rands, almost close to R1,000,000, to make even a few, to make something out of it. So yeah, that's one thing you need to take away from forex trading. Yeah. As well, let's go back here. So if you talk about forex trading, forex trading happens 24 hours a day. 24 hours a day, ideally 365, but markets do close. And the reason for this is that forex is traded one-to-one. Basically, there's no one exchange for forex. There's international exchanges around the world. So there's one in London, there's one in South Africa, Johannesburg. There's one in the New York Stock Exchange. There's one everywhere. There's even companies themselves might have their own forex desk where they trade forex. They don't need to go to a broker to trade for them. They can trade directly with other businesses, they exchange, or trade with other banks. They can buy directly from the banks. So usually, yeah, that's what it takes away from. That's something you have to take away from it, and that's the beauty of the forex market, is that you're able to make trades 24 hours a day. It's always open, so that means you can take advantage of that and actually make a move, or it allows you to be more flexible, you know. So say you're a person who's like up at night, you can actually trade at night and make some money at night. You know, you don't have to wait in the morning like stocks, you know. Wait in the morning and make a trade, and it's only going to be executed in the afternoon of like at the end of the day. You know, but once you place a trade in the forex market, it's executed immediately. You know, if I had to place a trade, which I'm not going to do, I usually allow myself to only have 2 trades or open at a given time. Actually, if I open a new chart, maybe I can. Let me do the South African rand. Looks quite interesting. Okay. Let's go on the daily. Let me make a quick analysis of the South African rand. Wow, if you look at the rand, we have a huge downtrend over here. And I'm drawing basically support and resistance, and the top is resistance. Let me just change the colors. I like having resistance in red. I'll later on teach all of you guys, whoever is watching, how to like use the MetaTrader. I don't like to see those grid lines. They distract me. So you might not be able to see them depending on the quality that you have on your video. Why is there two? Okay, let's go. Edit this one. Ah. I just started using MT5 and it's very confusing for me, you know. I've been using MT4 like for the last 3 years of my life. And I'm quite fond and used to it, but now MT5, it has a lot of new features but very confusing at best. It does a good job at confusing you know. So you never know what you're doing most of the time. But I love it, you know. This MetaTrader is like one of the best trading platforms out there. So yeah, I'm gonna make a quick analysis of the rand. There's like no support out here. I don't know if I look carefully. This looks like a descending wedge. I don't know if I'm doing this right, but this shouldn't be here. But it actually can. So this looks like a descending wedge, and usually a descending wedge, something like this signifies that there's going to be a breakout. And this breakout could happen in almost any direction. That's the thing. That's the thing. You can never know. You can never know with forex. You can never know where it's gonna happen. But for me, I would say it's gonna break up. It's gonna break up because this move cannot carry on like this. It's been like this for quite a while now. There needs to be something to pull. There needs to be some like resistance, or we need to find some support basically. So we can't be finding resistance the whole time. But that can happen. You know, some markets can really fall over. And that happened to the rand recently here. If you look, for months on, it just went down for 2 months, and then we had a break up, you know, and then there was a breakout to the top side, and then we found support over here. Let's make this green. As you can see, so if I say short term, I believe that the rand is gonna go up. Short term, and I mean in this week, this following week. Short term, for me, short term is a week. That's really short term for me. And I believe we could find resistance up here. I'll make this red. So I believe that the rand is going to try to do this. That's my best, and reasons for this is just technical. I don't have any fundamental basis of my assumption. I don't have reasons to believe that this thing is gonna go up fundamentally, but looking at it quickly, technically, we should go up, because we can't continue doing this. You know, we kind of had the same situation over here where we had an aggressive move down, and we just had to pull back a little bit. Even though it was consolidation, we didn't really put in any highs, but yeah, we basically had to find something. So yeah, and we're going to have this kind of same move over here. We might have the same move, consolidation, and continue down. But yeah, you can never know. It could be like, it could move like this more, for instance. But yeah, so this is an exotic currency, and the quote currency is the quote currency is the South African rand, and the base is the US dollar. So the base, it's based off the US dollar, and the rand is the quote. So yeah, and if the rand gets stronger, this market goes down. If the dollar gets stronger, this market goes up. So yeah, it could. And actually, if you look at this, you might say that I'm right. If I go on the daily chart, no, not this one. If I go on the daily chart, the same evidence that this market is going to try go down a little bit, meaning that the dollar is going to get stronger. So if the dollar is going to get stronger by the euro, the dollar should get stronger by the rand. But this is not a must. Most of the time, one market could be going down, but on the opposite side might be going up. So a good evidence of this is usually the gold exchange, because gold is actually weighted upon, it's quoted upon the US dollar. So it's the base is the gold price, and then the quote is the dollar price. And sometimes gold can go up, but and as well as the dollar go up as well. It can happen at the same time. The dollar and the gold price can go up at the same time, but the gold price still goes up. You know, it doesn't mean that, but it just means that one of them was a bit stronger than the other, so the market managed to still go up. So in this instance over here, the rand was very strong coming at the end of last year, and fundamentally the reason for this was that investors were thrilled that ANC elected Cyril Ramaphosa, the deputy president of South Africa, and they assume that he's going to be the president of South Africa come general elections next year. But the chances of that happening, we don't know. You're never too sure about that, and that's a fundamental idea. So you never know what's going to happen. Let me just look if anyone's watching. No one. One person watching. Okay. Yeah. So let's continue on. And there's a lot of jargon. There's a lot of jargon in forex trading, but these are all things that I'll cover later on a more solid video that I'll upload. This is just a live session where I just talk about it randomly and see where we go and where I go with things, you know. So I'll be doing these kind of live sessions every morning, just to get me in the morning mood. You know, it's always good to see yourself and prepare, you know. Yeah. And actually, I'll try in the morning to do an analysis of currencies that I pick, you know. So yeah. So I'll pick some of the popular currencies, and I'll make an analysis of them in the morning. So you guys can message me and tell me if what you would like for me to do in the morning. I don't know why it's doing this. It's very weird. Okay. Yeah, I'm still confused by MT5, but anyway, it's nothing I can do about it. I just need to learn how to use it. Okay. So here they talk about the base currency and the quote currency. So as you can see, in this instance. It's usually the base currency is on the left side, and then the quote currency is on the right side, and so on. And then there's the price of the price. And when we talk about movements in the market, we usually talk about pips, and these are points. These are points, how much the market has changed. And then we also have got something called a spread. Usually a spread is the difference between the buy and the ask price. And I'm not just reading this, I know this for a fact. And why the spread exists is because people always want to make a profit when they trade. They want to make a profit, especially the broker. So the broker usually gives you a higher price than they want you to do. So say for instance you want to buy. They usually will give you a higher price than the current market price, because obviously then they'll make a profit when they'll make a profit if you're right, and they won't lose that much if you're wrong. So I'll explain this better in a video, but yeah, right now I need to get my head straight into this. So yeah, myself as well, I'm following this guide only to help me learn a bit more about the market, because I feel like I don't know that much, so I feel like I should follow all the information that is available to me. The internet is your friend, so go on the internet and research. Investopedia is the best. It's like the best place to read all of this stuff. It's full of information you can read, you know. So I'll try organize all of this information, because there's some things here that you don't need to read, like really. So I'll try put this information down, and this is the property of Investopedia. I have to say, this is not my property. So when I'm reading this here, understand that I got it from Investopedia, and I'm not taking any credit for any of this information. So it's their information. So yeah, and then let's go to the Forex exchange risks and benefits. Okay. So yeah, here are the markets that I talked about earlier. These are some of the biggest markets out there. You've got Tokyo, which opens at 7 p.m. Eastern Standard Time. And then you got Tokyo, they close at 4 a.m. Then you got London, opens 3 a.m. Now what's Eastern Standard Time now? Okay. 18. Okay. Eastern. So right now, they say it's almost midnight for Eastern Standard Time. That's weird. Okay, maybe it's true, but I'm not sure. But yeah, it actually makes sense. The Eastern Standard Time is I think the time they use in the Americas, California and those people. But yeah, I prefer South African Standard Time. You know, it makes more sense for me. Yeah, so basically, right now Americans are still sleeping, and people in Japan just went to sleep, or they're about to go to sleep. Yes, not sure. Yeah. Yeah. Now look at these big banks over here. These guys move a lot of money, really. Like Citigroup alone, 13% of the market. That is staggering. These guys have a lot of money, you know, and these are the guys you want to watch out for when you're trading. These are the guys, and you can actually see them trade. You can see them trade. They're the ones who do these kind of moves. These kind of moves can't be made by a small guy. They're the ones who make these kind of moves, like this, you know. You can see them trade actually, and they have techniques. When you get more experience in trading, they have certain techniques, and these are what form patterns in the market. They form patterns, you know. Some people talk about head and shoulders and all these funny things, you know. Those are the techniques that these big banks are using to trade. You know, they make these patterns over here because they've got certain strategies that they know work, and they know that those patterns influence the market in order for them to achieve their goals. you know. So they use those patterns in order to move the market. You know, if they want to buy, they'll indicate to the market that we want to buy. You know, so you either join us or you're gonna be left behind or something like that. You know, because they want to get liquidity in the market in order for them to achieve their target price. So yeah, that's something for another day, but I just wanted to talk about it quickly. And then yeah, I always keep a close eye on what the central banks are saying, you know, and as well as the total market participants, you know, and there's this thing about retail traders don't make such success and all those things, and the reason for this is that retail traders never actually have a plan or strategy on approaching the market, you know. So it's something that you need to work on when you're thinking about trading. You have to have a strategy. Me myself, I have a mental strategy, and that's not good, you know, and that's actually come up where I end up not succeeding as much as I would because of my mental strategy. Because it's better to have a written strategy that you follow, a guideline that's systematic, something like that, because in the end of the day your mind can be tricked and deceived even by yourself. So it's something you need to keep in mind. So yeah, let's get back to what I was going about. So yeah, Forex history and market participants. Okay, so yeah, these are terms I've never heard about, you know, dollarization and managed floating rate. These are things I need to read up to, you know. If I can tell you my backstory about, let's just make this first video about me talking about myself and actually getting used to you guys getting used to me, and I'm trying to get comfortable in trading. This is my first video on YouTube, my first video. Well, not clearly my first video, but my first proper video that I'm going to leave there for everyone to watch and make fun of if they want to, you know. So I started trading when I was in high school using my uncle's account. He was just showing me the tricks, and you know, I was just using his account to trade. And because you're not allowed to trade if you're not over 18, so but I started trading, and that time I knew nothing. And the time I started trading was when the market was generally moving in one direction, and I actually started trading CFDs before Forex. I actually didn't even know about Forex. But CFDs are basically the same as Forex, you know, but some CFDs have closing times. Actually, most of them have closing times. Yeah, so I was trading. I started trading at the beginning of a bull trend. If I actually had to open up, I was basically trading. Let me open that. Okay, it's not here, so I'm gonna have to put it in. CFDs. I was trading the DAX. Well, the collective one, the index. So where is it? It's not here. It should be. Yeah, there we go. I was trading the DAX. It was my favorite CFD. And I'm going to show you what I was doing. When I was trading it, I don't remember how old I was, but I remember I started when I was in grade 10, I believe. I started trading when the market has started this big bull trend that we kind of currently in, you know. Let me just zoom out. So MT5 doesn't want to let me go sideways. Wow. There is an issue with MT5 loading charts, you know. I've noticed this as well on my phone. It takes a while to load a chart. MT4 just loads the chart instantly, you know. But anyway, let it load. Let's just let it load. So let me just explain. So when I was in high school, I was trading the DAX and oil as well. Oil was just a crazy move, you know. So what happened was I found myself buying and buying and buying, and I was like, wow, it's so easy to make money in this. It was so easy to make money, and I was like, I knew nothing. I knew nothing about forex. I knew nothing about the market. But that time, I was I was in an event that I was at the beginning of a trend, so it was really moving. Every time I placed a trade, almost instantly it will go into profit. Almost instantly. So that was amazing for me. Just the ability for me to make money online on my phone while I'm in class. You know, you're in a boring class and you're like, oh, I really don't want to pay attention in this class right now. But you can just go on your phone and open a trade and you've made money, and other people are just bored in the class. So you there busy making money, and that's what, and that was what fascinated me about trading. Okay, this thing is getting me getting annoying. Okay, there we go. Yeah. So yeah, I believe it was around about this time. It was around about this time because I remember there was an event where I went up almost 200% when I left it for a week, and oil was going down, so I was just selling oil, selling. It was in 2015 and 2014. That's when I was really like into forex, and it was fun, you know. It was something that I really enjoyed, and I love forex now. Let me open oil. Commodities. It's here. Oh, wheat as well. Sugar. I was trading wheat. I was basically into CFDs and all this energy. So let's go. Okay, this one. Oil recently started going back up. I don't know why, because I haven't been paying attention to the fundamentals, but yeah, that's one thing that I've been watching and keeping an eye on. I tend to read news, but I don't completely like go out of my way to read about other currencies that I'm not focusing on. Why is it not showing up? Okay, here we go. Oil recently started going up and it broke above 60. Let's go on the weekly chart. And it's one of the reasons why I became a long-term trader is because I started with CFDs, and CFDs, they basically are like stocks, but put in they like stocks, but a contract, and they expire. So basically, you can buy the contract, and if the contract continues going up, it tracks the original asset class, or like the asset, and they usually expire. But the beauty of them is that they usually were going up most of the time, and that's what I liked about CFDs. They allowed you to trade. Big markets in small portions, and that's what I loved about CFDs. So, like the oil CFD or future. Look at this. Look at this move. You know, we just recently broke above 60. The last time I saw that was it 2015. So that's when I still used to trade oil. But let me just zoom out here. Wait for this to load. Yeah, just like that. I tend to stick on the weekly and monthly charts. I go down daily to make a quick trade, but I tend to stick on the weekly and monthly charts nowadays. When I started trading short term, I was making a lot of loss because I just didn't have that, how can I say, that focus that I need. I'm more about placing a trade and worrying about it when it closes, or when something happens. I don't want to keep watching the market all the time because I'm always busy doing other things. So I like to place a trade and let it run, so yeah. And coming close to the end of the video, but um, yeah. Economic theories, models, and data. Last year, 2017, I spent a year at university. We never did any of these things yet, but last year I was doing finance at the University of Johannesburg, a diploma in finance. So I spent a lot. I spent a lot of time learning a lot about economic concepts, but I found out that economics is not for me. I love technology, and I prefer technology and everything because I see potential in the technology industry, especially e-commerce and everything like that. So I decided to change my course, but I still have a large interest in uh, in the markets because I believe everyone should be trading. Everyone should be trading because say you work because at the end of the day you're gonna deal with the markets, be it with your pension fund, your insurance company. All of those are market participants. You are one of them as well. So why not invest in yourself? So you can do this in many ways. So I learned a lot of economic concepts when I was there, and I still trying to. Now that I left, I'm gonna carry on teaching myself those concepts. But I managed to grasp the basics. That's what they taught us in college or university. I don't know why Americans call it college, but yeah, Americans and their weird concepts. Looks like the dollar is getting stronger, but the rand is not moving. It's not even that. It's nothing really. It's some people will look at that and say it's a lot, but it's nothing at all. So yeah, oil price. This contract is new, so it's not allowing me to go further. I believe the oil CFD is renewed every 4 months. I'm not sure, or is it monthly? I'm not sure, but yeah, one instance that I got into was that I was in a winning trade, and it was actually in the DAX, and I had a winning trade. It was winning. I've never seen such a winning trade. The next morning I wake up, my whole account is blown just because the CFD expired. And I was confused. I was like, that's when I was still in high school, I was so confused. And I was 18 that time, and I was using my own account at that time. I had recently just got my own account, and my uncle had given me some investment money, and I had started, and my whole account was blown just because the CFD expired, and the new price was lower than my buying price. So the market opened lower than I bought, even though I was in profit the previous contract. So I lost all of that. And the market was going to my target. It did go to my target eventually, And that time I didn't know that there was such things as expirations in CFD. So that's one thing that I learned. I lost a lot of money that day, and I had to start from scratch. And I didn't even ask for more investment. I used my own money. I was so embarrassed to even tell my uncle that, hey, I blew my account just because I didn't know that CFDs had expiration dates. And I was like, wow. So I had to invest in myself. So I still say that people need to. I believe people should consider investing them in the fund, even if they're not doing it directly by themselves, or they can use their bank, they can use a broker, they can use anyone to trade for them. you don't even need to spend time on it. You don't. You know, sometimes it does get, you have a job, but you don't need to spend some time on it. You can save for a month and say, every month I'm going to deposit this much amount into my Forex account, and automate it, automate it per month. I make one trade per month, and yeah. And some people already do trade Forex themselves. They exchange money, or they have these currency accounts in their local bank, where they hold foreign currencies, to protect them from inflation within their own country, So yeah, I recently just got one myself, so it's quite nice, and it's easier for me to like move money. Before you had to use PayPal, and then you couldn't use PayPal without a US account, um, check account, so all those complicated things. But my bank, which allows me to do this, allowed me to have a US dollar account, and it's easier for me to move around money, US dollars on our PayPals and everything like that. So yeah, you are still trading Forex. You're gonna trade Forex, or the market itself. Forex is one of the markets. There's many markets. There's bond markets. There's the stock market. You gotta join these markets, and it looks like the market is waking up now. People are coming in and trading, Not much, but they're coming in. So yeah, tomorrow I'm gonna have another session, and I'm gonna try to be more structured. An hour is really a long time. Like I started rambling on about things, but I can see that it's a really long time. So I believe that I can improve. There's a lot of improvements that I can make, but I shall make a proper video, a shortened version of everything that I did today, because I see that a lot of things I went through them quite quickly, maybe because I speak quite fast, but yeah, everything should be alright, and yeah, I'm just gonna continue my analysis that I was doing here, but this thing over here is confusing. Yeah, looks like we're moving up. Many people have different ways on how they plot support and resistance, but yeah, if I had to make a new chart, I'll use, I normally trade like this if I showed you, and I'm not saying this is the best way to trade. I don't believe it is, but I like it and I prefer it. Everyone has their own way of trading, everyone has their own taste, so yeah. Let me see what I can do here. I want to put in moving averages. So yep, I love using moving averages because they help me out a lot. Add another one. Oh, it's 12, I think. And then I use 3 because the market tends to find support at different levels. So I use 3 to find all of the support zones. So yeah, basically support and resistance. Look, for instance, I can give you an example right now that the market has different points of support and resistance. I'll just put in a box quickly. Look here, for instance. Make this bigger so it's more visible. It found, actually this is much better over here. That's 0.1, and then let's continue on. Second point. See there, this is points where you could easily have entered the market, and And this is daily, you know. This is why I love daily, because you come in here, you're gonna hold this thing for how many days now? Look at this, almost a week, 2 weeks, and then you can just come out when the market pulls back. And that's why I use trailing stops. So the market will trade, and your trailing stop will follow the market. When the market comes against it, it comes out, and you can re-enter the market. You know, you basically secured yourself. You know, and there's another F point. Just come here. And look at this. Support and resistance, just like that. Yeah. So look, the market is moving like that. Okay, we're about to end, and I'm going to come out like that. So yeah, go up. And the market usually moves about the same amount. I don't know why it's doing this. Okay, anyway, I'm ending there. Goodbye, and see you another time tomorrow.